Hi, I'm Ava Makina, and this is the Coin Daily. Here are the headlines. Transit Finance loses $1.8 million as stolen funds reach Ethereum. BlackRock moves $172 million in crypto to Coinbase Prime. XRP tops Bitcoin volume on South Korean exchanges. In other news, Jane Street cuts Bitcoin ETF holdings and adds Ethereum ETFs. Bitcoin rebounds to $81,000 after inflation-driven volatility. We begin with this. Transit Finance was hit with a fresh exploit, losing just under $1.9 million as attackers routed funds from Tron over to Ethereum. The path the funds took is key. This wasn't an exploit that broke Ethereum itself, but rather one that leveraged cross-chain infrastructure, moving assets from Tron, then consolidating them in a single Ethereum wallet. Right now, the attacker is holding about 1.87 million DAI on Ethereum, and that's where investigators, analytics firms, and issuers have focused their attention. Ethereum figures in not because its core network was compromised, but because it is where the suspected attacker wallet now sits. That gives watchers a single public destination to monitor. In cases like this, on-chain tracing tends to focus on the wallet where assets are aggregated, because that is where laundering, freezing requests, or recovery attempts can become visible. That also makes this different from the recent Aave and Kelp recovery case, which centered on court-approved movement of funds that had already been frozen. Cross-chain exploits like this highlight that the ultimate headline isn't always the chain where the exploit started, but the one where the money lands. Whether Ethereum's visibility as a settlement layer helps with recovery, or simply marks one more pit stop for attackers, is the open question as wallets and exchanges keep watch. Now to Coinbase, as BlackRock moves $172 million in crypto to Coinbase Prime. BlackRock-linked wallets moved 861 Bitcoin and 44,691 Ether to Coinbase Prime, about $172.7 million in total, based on Arkham intelligence tracking. The key fact is the destination. Coinbase Prime is the institutional venue BlackRock uses for execution and custody, so this was not random wallet activity. That is why traders paid attention. A transfer into Prime can be read as preparation for trading, especially during a shaky tape, but on-chain data only shows the move. It does not reveal whether BlackRock was preparing to sell, shifting assets for custody, handling settlement, or just cycling positions inside normal fund operations. What makes this worth watching now is the timing. BlackRock's iShares trusts also logged daily flows on May 1, 2026, with IBIT at $284.4 million and ETH at $43.2 million. So for viewers, this is not a confirmed risk-off signal. It is a real institutional transfer into a trading and custody hub at a moment when ETF flows are already in focus, which means the next visible clue matters more than the transfer alone. Up next, XRP and a new volume lead over Bitcoin on South Korean exchanges. XRP has surged up South Korea's crypto trading charts, overtaking both Bitcoin and Ether on the country's largest exchanges in the past day. On Upbit, XRP KRW was the most traded market over the past 24 hours at roughly $110.9 million, ahead of Bitcoin at $88.6 million and Ether at $67 million. On BitHum, XRP KRW traded about $41 million, ranking second behind Tether and still above both Bitcoin and Ether. This burst of trading puts XRP at the center of Korea's speculative attention, but it's more a local signal than a broader global leadership switch. What's just as remarkable is how XRP's price has struggled to break out, even with all that activity. Watch the latest XRP candlestick. Price is pinned at $1.43, with both support and resistance meeting at that level. Movement is tight and contained despite heavy volume. The freshest signal here is on the US side. Spot XRP ETFs took in $25.8 million. That matters because it points to a different kind of demand than the rapid-fire activity dominating Korean exchanges. Instead of just showing XRP is hot with short-term traders, the ETF bid suggests some capital is being allocated through a regulated wrapper as well. So the story is no longer only speculative churn in Korea. It's that XRP is now attracting a second lane of buying from US ETF investors at the same time. We turn now to the US, as Jane Street trims Bitcoin ETF exposure and adds Ethereum ETFs. Jane Street's latest 13F points to a clear first quarter rotation, lower reported exposure to Bitcoin ETFs, higher reported exposure to Ether ETFs. That matters because Jane Street is a major trading and liquidity firm, and this kind of shift suggests large players may be getting more selective inside crypto instead of treating the whole sector as one trade. For viewers, the bigger takeaway is what that says about market leadership. If institutional money is starting to separate Bitcoin from Ethereum in reported fund exposure, then crypto may be moving into a more two-track market, where flows are driven less by a blanket risk-on or risk-off call, and more by asset-specific positioning. Just keep the filing in context. A 13F is only a quarter-end snapshot of long US-listed holdings, so it does not show the full book, short-term moves, or derivatives. Now to Bitcoin, rebounding to $81,000 after inflation-driven volatility. Bitcoin's swing around 80,000 became a quick stress test for crypto risk, with traders knocking it below that level before buyers pushed it back toward 81,000. You can see Bitcoin trading against both its support and resistance here. The price dropped just under 80,000 before rebounding to test 81,000, with buyers stepping in against the prior low and stalling again below the high. That snapback above 80,000 mattered for one reason. It showed crypto was trading macro first, not on coin-specific news. Hotter inflation data and Iran-related tensions were enough to trigger the washout, then the rebound, as traders rapidly repriced risk across the board. So the takeaway isn't just that sentiment flipped fast. It's that outside headlines were setting the pace for crypto in real time. Bitcoin holding that $81,000 rebound after inflation-driven whipsaws is what sets the market's next move. That's tonight's show from the Coin Daily. How did inflation headlines drive Bitcoin's dip below $80,000 and rebound to $81,000 tonight? And which specific macro signals mattered most? Subscribe and ring the bell, and you'll get this every evening, plus shorts throughout the day whenever something moves.